coming up. We've got futures lower this morning. We do have the Federal Reserve's highly anticipated rate decision next week, and we've had a lot of data to go through leading up to that decision. It's 42 Macro founder and CEO Darius joining us with his predictions. Take a look at futures this morning. As you can see right now, a little bit of a negative start to your Friday. All three major indices, though, did hit record highs yesterday. As you can see, the Dow gained 617 points. This is after that CPI print that we got before the market opened yesterday. So take that. Let's look at yields right now. As you can see right now, the 10-year is at 4.04% and up. 4.5. We're just above 4%. Markets are fully pricing in a quarter-point cut for next week's Fed meeting. This is the first such prediction in 9 months. Futures traders seeing a 7% chance of a deeper half-a-point move. Let's bring in 42 Macro founder and CEO Darius. So let's talk about that CPI print yesterday. A little hot to your point. You say sticky inflation. But the question is, the markets brushed that off yesterday. We had a very strong performance last night. Why?
Indeed. And thanks for having me, Cheryl. Appreciate you. So we've been coaching our global investor community to expect that the Fed has a new phantom 3% inflation target. And ultimately what that means is that they're going to be acquiescent to this new fiscal dominance regime that we're in and ultimately supply the markets with incremental monetary easing.
You say the Trump administration is likely guiding the U.S. economy to paradigm C.
Oh, yeah.
What does that mean?
Paradigm C is the administration's goal and stated intent to outgrow the debt and deficit trajectory. Okay. And so what that ultimately means is that they're going to be pulling all sorts of levers, monetary levers, financial levers, deregulation levers, in order to engineer an economic boom. It's our view that the economy is likely to boom starting next year, and it could last for several years.
But Lee, what does the polling show you about the economy?
So the polling right now on the economy is really not good for the president. Now, it's the same as it was under Joe Biden. So it's not like we're looking at it's been a huge decline. But I think one of the things that the Americans had huge hope that was going to recover, that we're going to see better. So right now we're looking at an economy where people are not optimistic, and they're not optimistic that it's going to get better. How do you see it?
Yeah, absolutely. So our models are showing us that this is an economy that's a coiled spring. It's very likely, it's unlikely that we go into recession. We are what we've been calling a U-shaped economy, and we're in the worst part of that U, the bottom left side of that U. So over the next 1 to 2 quarters, we're probably going to be in this rough patch, and the polling reflects that. However, if you look ahead, according to our models, it's highly likely that growth accelerates materially next year. You're talking about accelerating monetary easing, accelerating fiscal easing. You're talking about a dollar that could be down much lower, inflating global liquidity. We're talking about a market that could bubble.
And that is what Treasury Secretary Scott Bessent has been saying over and over. And the administration, you're going to get growth. Look at Q4, just wait. And I think that because it has this massive sea change in the U.S. government with the tariffs and,
I've known Scott for many years. Yeah. He's a former client, and obviously I wish him well in his new job as the Treasury Secretary. He and I think very similarly in terms of the dynamics that the levers that you need to pull in order to engineer these outcomes. And it's our view that they're pulling them.
Yeah, absolutely. I want to talk to you about the Fed meeting, because President Trump's choice for Fed Governor, Stephen Moran, he's on track to join the board in time for the meeting. So likely Monday. We've never seen this before. This is historic. Senate Republicans are pushing a confirmation vote as soon as Monday. That's just the day prior. Trump administration also wants an emergency ruling, and they're asking for it from a federal appeals court to fire Lisa Cook. That would block her from joining that exact same meeting. We've never seen something like this before, Darius. What do you make of it?
Well, we actually have, if you go back to the 1940s and 1950s when we were in the last fiscal dominance regime. Whenever you get debt this high, the government only has 3 choices. You can cut, you can grow, you can print. And their choice, this sort of quote-unquote hostile takeover of the Fed, is the administration's decision to use the monetary lever to assist with their growing their way out of the debt problem. And so ultimately, what you're talking about is a situation where they're pulling levers, and ultimately you're talking about an economy that can be much better, markets much higher over the next year. So if you take away one thing from me today as an investor, expect structural regime change at the Federal Reserve, and you need to position for that.
Interesting. You agree with that, Mitch?
I tend to agree with it, and I think growth is the solution. The problem is in the short run, kitchen table issues, they don't feel it, and that's the challenge. I'm curious, when the Fed meets and they cut as expected, is this going to be one of those buy the rumor, sell the news situations? Because every time data has come out that supports the Fed cutting, the market's gone up. But when it finally happens, is it going to be a so what kind of event because it's kind of baked in, and we're going to see the market tumble as a result because it wasn't more because people were expecting more?
Yeah, you could just certainly experience a correction along the way in terms of pricing in this paradigm C theme. But ultimately, if you have a medium to longer term time horizon, which I would argue most retail investors should have, then you have to, every dip is a buy. Until we exit paradigm C, until the administration stops trying to fix the problem with growth, then you have to buy every single dip.
Darius Dale, it's always great to have you.
Yes,
Thank you for
pleasure to be here.
joining us on set. Big morning today. Appreciate it.
Thank you.
All right.